Hello, everyone. Happy Sunday. This is Simon with AvaTrade. Welcome to our weekly webinar, Mapping Out Your Week Ahead. And as usual, I'll be using the same quote that traders like to use. You plan your trade, and then you trade your plan. And of course, nothing guarantees 100% success, but we all know, not just in trading, but in anything we do in life, if we spend a little bit of time to organize our thoughts, to have a plan, to have structure, we could expect better results. Okay, a few things about myself. My name is Simon Friedman. I'm a senior account manager with AvaTrade. I've been trading since June of 2000, so it's almost 26 years now. For about 11 years, I was a prop trader in New York City and Wall Street. And after that, I moved on and I started to trade differently and mentor and educate others. And I'm very happy I have this great opportunity to be assisting our customers at AvaTrade. So the agenda of the webinar. For those that are regular here, you know what we do here, and I'll just explain to new people what to expect from this webinar. So we go through fundamentals. I'll bring some screenshots from articles showing important things from the fundamental perspective. We'll discuss indices, stocks, commodities, FX. We'll go through winners and losers for the week. We'll go through economic calendar, which is an important aspect of trading. And we'll take a look at the charts at those instruments, trying to look from an angle of technical analysis. All right, risk warning. Everything we do here, it's purely educational. You can find the full statement at avatrade.com website. Social media, please sign up, register, follow us at Telegram, X, which used to be Twitter, as we know. YouTube channel, as I always say, it's my favorite. You have a lot of information there, including educational materials, tutorials, and webinars that we give. They are being recorded and posted on YouTube. And of course, if you are watching this on YouTube, please don't forget to click likes if you like it. It just takes a split second for you to do, and it helps others to see it. I don't know how exactly it works, but there's an algorithm on YouTube. If you put more likes, more people could see it. And I think it's a good idea. All right. So before we go to the articles and slides of the articles, we had pretty much sell-off week, right? And Friday was really intense. It looked like nobody wanted to go along the markets. It was a few things that, as usual, Trump is triggering a lot of reactions on the market. So first, he said, I don't want, and I quote here, I don't want to do a ceasefire. And after that, the reaction of the market, he said, and I quote again, we are getting very close to meeting our objectives as we consider winding down our great military efforts in the Middle East. He wrote in his post on Truth Social. So I guess that's Trump's style, right? First harsh news, then good news, and the markets are fluctuating, which is not the best thing for traders, especially for day traders, right? When things are volatile and we have reversals and establish some kind of a channel and so on. It depends on your trading strategy, of course. So also we had chances of increase in interest rate. They went up. There's according to the sources here, there's a 31% chance of the interest rate hike in this year in 2026. And the chance was actually zero about a week ago. So things are changing. We had indices across the board losing. NASDAQ, for a moment, it dropped into correction zone. It was down 10%. And something that the analysts call the correction when we went 10% lower than the high of October 29th. So this is something to pay attention to. We had S&Ps dropping 1.5%, Nasdaq 2% was the biggest loser there, and Dow Jones was down 1%. So across the board. Also, the question that I raised for myself, as the markets are selling, usually we have something they call safe haven. The money flows into usually gold, right? The three assets that we spoke about many times: gold, Swiss franc, and Japanese yen. And we had also a big sell-off in gold. I think this was one of the biggest losing weeks for gold. We'll take a look now at a few articles, and one is reflecting on that. All right, so here we are. These articles are from MarketWatch.com and from Barron's. The financial markets are responding to Iran conflict in unexpected ways, leaving some investors puzzled. Gold, after having during times of stress, has been falling. Meanwhile, stocks are down, but not as much as many expected. And the key points, as we said, they structured in a nice way, so we don't need to go through the whole article here. Gold futures lost 9.6% this week, settling at 45.74.90, and marking the worst week in 14 years, despite ongoing geopolitical conflict. Crude oil prices surged to around $112 a barrel due to Iran war, raising concern about inflation and negative impact in the U.S. economy. The S&P has fallen over 5% since the war began, while the 10-year Treasury yield rose to 4.39, indicating inflation fears. This is one. Second one, here the some points on the equity markets. The first major stock index just fell into correction territory. Will others follow? It says right here, your stocks just wrapped up another rough week, leaving small caps in the correction and other indices closer to it. U.S. stocks finished sharply lower as the Iran conflict continued, with the Russell 2000 entering correction territory. The Nasdaq Composite fell 2% on Friday, its largest daily percentage drop since February 12, and is now 9.7% below its record, we just spoke about in the beginning, right? Brent crude oil rose above 110 a barrel, while hedge funds sold a record 9.6 billion in stocks on Thursday. So it looks like hedge funds are unloading on equities. It's not a good sign, right? Here's the gold. That's something that I mentioned to you, right? Gold had really a bad week. Gold isn't your safe haven in this war. It just logged its biggest weekly drop in over 14 years. Margin calls, jump in valued risk, and shifting U.S. interest rate expectations are pulling precious metals price lower. Key points. Gold prices recorded their largest weekly percentage drop in over 14 years, falling 9.5% despite the escalating conflict with Iran. Economic forces, including priced out Federal Reserve interest rate cuts, a stronger U.S. And stronger U.S. dollar overwhelmed gold's safe haven appeal. Market panic, margin calls, and increased valued risk contributed to gold's decline, with Fed rate hikes chances now over 50%. Nice picture though, right? Come to oils, okay? This is important. Here, exact oil price that would tip the U.S. into recession, and we're getting closer as the Iran conflict drags on. And here are the key points. If oil prices reach 140 a barrel and stay there for a month, it could trigger a U.S. recession, analysts said, while an increase to 175 a barrel would almost certainly cause one. Rising oil prices have prompted economists to raise U.S. recession risk to between 35 and 40%. Despite increased U.S. energy independence, A high oil price will raise inflation, squeeze consumer spending, and potentially delay hiring. Big concern there. And here's another one on oil. Oil prices rise again. Trump says he doesn't want a ceasefire with Iran, right? That was his first statement, as we said. Then he said afterwards, kind of opposite statement. Brent crude oil futures and WTI futures both rose on Friday. Saudi officials warn oil price could soar past 180 a barrel if Middle East disruption persists until late April. Right here we said if it gets 140 and holds for a month, it's going to be recession. And it says if it hits 175, it will cause one. And Saudis are saying that we could soar past 180, which, according to previous article, will bring us to the recession point. U.S. Treasury Secretary Bessent suggested the U.S. might and sanction 140 million barrels of Iranian oil, impacting prices. All right, and here we are with the next meeting, which is scheduled for the 29th, right? The decision 29th of April. It's a month from now, 5 weeks. So interesting, right? Now switch. So the rate staying the same. It's 93%, and there's actually a small percentage that next meeting we're going to have a hike. As of now, 6.2%. So that's the Fed's rate situation as of now. Now, economic calendar. I'm going to explain it towards the new people that are not familiar with this. This is public info. You can access it on our web trader or the app, or you can just Google it. There's a lot of sources that you can get this information from. As I said, it's public. You can know it ahead of time. And what I do here, I pull out only high impact events, and the times here are in GMT. So you can customize your list. You can filter through things that are relevant to your trading and so on. And I always like to say that if you are an active trader, it's very important that you know these things ahead of time so you can plan your trading, you can enter, exit as you please according to your strategies, and don't get caught up in spikes because you didn't know that something was about to happen. So a few things this week. Again, only high impact events. There's so much more. Bank of New Zealand, I guess the president speaking on Tuesday. PMI numbers from Germany, PMI numbers from European Union, PMI numbers from UK, and PMI numbers from US. So Tuesday looks like a PMI day. Wednesday, inflation numbers, CPI numbers from Australia, and CPI numbers from UK, and President Lagarde speaking on Wednesday as well. And Friday we have retail sales from UK. As I said, if you look through this, there's so much more there. I just take out the high impact events. So another thing from last week, we had a bunch of interest rate decisions, and the situation with the war brought a lot of caution into central banks. So we didn't see any changes in interest rate. Winners and losers, right? It's the last thing we'll see before we go to the charts. So these are futures. Most of it is commodities. We're going to go through them when we get to the charts, just see how they look from the technical angle. And also a few indices here. Again, these are the futures. Energy, as you could guess, were the strongest ones. I didn't put oils here. The Brent was stronger than crude. We'll take a look at the charts when we get there. So heating oil was the champion, almost 15%. Sugar was up 9.26, coffee up 8.63, and gasoline up 8%. To the downside, metals were having a sell-off. Silver down more than 14%, gold almost 10% down, palladium 8.5%, copper 6.6%, soybeans were down 5%. DAX, this is the indices, DAX was down almost 4.5%, Nikkei 382, Platinum, another metal, down 3.5%. Excuse me, I just want to take a sip of water. Sorry about that. Platinum 3.5%, wheat down 3%, and we have U.S. indices, Dow Jones down 2, Nasdaq down 2, S&Ps down 1.9%. So these are the winners and the losers. All right, let's get to the charts. And as usual, we start with indices. We start with Asia, China, and Japan. Here we go. Chinese index was holding about 200-day moving average, and then Friday was sold. You remember last week I pointed out that when the global indices were falling, Chinese index was really moving higher, and we reached the previous resistance here around 15,087, and since then, this week we've been selling, closing below 200-day moving average here. Excuse me. Nikkei, as we saw, it was at the big drop on Friday, and for the week it was down. We did close below the previous sort of support at around 51,500. Moving to U.S. indices. As we said, Nasdaq was the biggest loser. You take a look at the weekly chart. We're clearly trying to break down, and that's what we said. We briefly went into correction zone, and then we recovered a little bit towards the end of the session. It looks like it. So Nasdaq is below the 200-day moving average here on the weekly chart. We tried to break the previous week low, and I think if the market continues, which we don't see any positive news in regards to the war, so we could probably continue lower and testing the 50-day moving average here. S&Ps, similar situation. We did reach the level below the previous week. We also touched, I think, let's see, low 65.25. This was November. And we actually went below that November before recovering a little bit. This is daily chart. So you could see Friday was intense sell-off. Wednesday we did break below 200-day moving average again and continued. Dow Jones, here we go. We're retesting this 45.7 area. Looks weak. We said the Russell was weak as well, right? Germany, a big sell-off here. Intense Wednesday, Thursday, and Friday, huge sell-off. Let's see how we look on the weekly chart. The weekly chart was right here in the air, so we could be continuing lower from here. And here comes the UK index, also intense sell-off this week. If you remember, until a few weeks back, UK was the champion, making all-time highs. We're seeing Wednesday, Thursday, and Friday intense sell-off. Also, the trend line that was set up here was broken on Friday as well. Let's hit the Frenchies. Frenchies are just falling through the floor. Right? I'm just going to repeat myself. I said when we had this move, if you remember, I mentioned that I didn't see any reason for the market, the French index, to move this high. And when things got rough, you could see there's no fundamental behind it. We just went straight to the level of September. So it looks like out of the major indices, including US, Asia, and Europe, Frenchies are the weakest. All right. So those are the indices. Again, sell-off into the close of the week doesn't sound good and doesn't look good. So let's see if we have any developments into the opening of the week. The markets, we could actually have another gap if there's nothing positive and continuation to the downside. As we saw in one of the articles, the hedge funds are unloading billions of dollars, and we could see that panic growing. All right, going into individual stocks. Let's take a look at the big boys, as we call them. Apple is holding here We didn't break the previous low here from January. We stopped right on 200-day moving average here. Amazon, we had this cross, right? Did that cross 50 below 200. Doesn't look so encouraging here. Microsoft is testing the previous low. After that, we had a very weak attempt to go higher. We came straight back there. And on the weekly chart, we actually approaching the 200-week moving average here. If we break that, we might continue sliding lower there. Google has been a champion out of the group, right? And as of now, we're really holding. We had the double bottom here. We didn't test that yet. So Google looks the strongest from the group, I think. 295.80, around these levels. We had the double bottom support here. Meta doesn't look so strong. We're approaching also the level of November here. See, when you see this gap down open and no correction, the stock is being dumped in a simple language. Tesla, similar situation, gap down and continuation here. I wanted to bring the oil stocks, and situation remains the same. Both of them are strong, but Chevron is much stronger. So here's Exxon, right, on the oil prices skyrocketing. We are at around 160, but take a look at Chevron. Chevron is continuing. On Friday, actually, we had the spike that reached almost $205, closing at 201.51. Let's take a look at banks as an indication, see if we had a continuation to the downside. Banks are actually trying to stabilize here. We didn't have a big sell-off the last 3 days of the week. JP Morgan, Goldman also holding 200-day moving average here. Bank of America a little weaker, and Citigroup is also holding. So the banks, we don't see that huge capitulation panic, as traders like to call it. So let's see how this week will play for the banks. Now, if you remember Nike, right? As we said about Nike last week, I think last week we spoke about it, and we said that Nike might retest the lows. Let's see. For some reason I don't see it. Here we go. Take a look. We actually went to the penny. We spoke about it around here, right? And then we said we might be coming to the level of March here, March and April. And we did actually. We came straight here. The low was 52.10, closing 52.27. Now this is super important, because from here, if we did break that, we probably continue lower here. There's no buying actions here at all, right? Weekly chart looks, we had 4 consecutive weeks dropping about $12 here. It's about 20% probably, if I'm not wrong. So let's see how it plays. It looks like nobody wants Nike anymore, right? It's been selling. Was an attempt here, strong push around 77, and since then we've been sliding lower again. So around 52, that's our support. Let's see how things work out. Now, the last thing, let's see on the stocks, let's see NVIDIA as an indication with the AI business, right? So on the daily chart, we just broke through 200-day moving average here. As you could see, we had a strong resistance. I'm just going to draw the lines just for visuals. We had a strong resistance somewhere here around 194, 195. And our support, less support, was somewhere here around 170. We closed 170 to 82. Thursday, we broke through below 200-day moving average. I'm just going to make it bigger. And Friday, the sell-off continues. So this level here around 170 might be retested. And if we break it, we might move lower. As I always say, on a huge sell-off, even the strong stocks are selling, and in the huge bull market, even the weak stocks are going higher. So let's see how we do. There's a lot of accumulation in this channel, right? We failed to move higher to confirm the highs here. The all-time high for NVIDIA was 212.04. This was the week of October 26. So if we do break this level where we had spikes trying to break it, we might go and retest this swing low here at 163.98, almost 164. And that would also bring us to break the 50-day moving average here. So let's see how it works. All right, moving to commodities. Moving to commodities, and we'll go through commodities from the winners and losers. But before that, I just wanted to show you the oil, as the oil is all over the news, right? It's the biggest issue. Just remove this lanes. Why they here? I have no idea. Okay, so here comes the oil. This is crude oil, right? We had this spike here on the 9th of March, ending up closing the gap. Now we're having some accumulation here in a tight range between low 90s and 100. And let's see if over the weekend we're going to shoot up or we come down. Now Brent oil is much stronger here. I guess it's being affected more. We had two spikes here ending up pretty much at the same level, 119.44 and 119.10, so around 119. If we move higher, we're going to have a third retest of that level within 2 weeks. And let's see if that happens. I mean, anything could happen. We still have many hours before the market opens. So if we have bad news, we could just open it. I don't know what price with the gap. Or if we have good news, we could open it with a gap down. So let's see what happens with oil. Now, going through the winners and the losers, we'll start with heating oil. Take a look. Just making highs here, skyrocketing vertical parabolic move. Heating oil up almost 11%, 1083. No resistance ahead. Gasoline. One second. Okay. First, we'll see the sugar. Sugar, if you remember, we spoke about the sugar that at some point is going to shoot up, and take a look at this move after accumulation here, getting back into the channel. We're having the whole week, 4 days in a row, closing about 200-day moving average. Sugar was up for the week, 9.25%. Let's see in the weekly how it looks here. We face, now if we establish some kind of support here above 1544, we might actually be ready for continuation. This sell-off was a long one. If you take it from November 2023, we've been sliding lower here. Coffee as well. We had double bottom here around 277. We had a very strong week. See on the daily chart. You could see here we came back above the 295 level. Now we're facing the 50-day moving average here. So that's on coffee. Gasoline also skyrocketing here, as the same as heating oil. On the monthly chart, if we continue, we could be coming here to 380s area. Huge month for heating oil. Sorry, gasoline, up 8%, right? Closing at the highs, closing the week at the highs. Now, to the losing side, there's a huge group of metals. Silver selling here, coming to the previous support, around 66.5, I would say, or lower here at 64.31. Silver down 14.36%. Gold, as we said, the biggest losing week in many, many years. Take a look, 3 consecutive days with a huge volume selling here. Now, what we can see here, that we had this spike ending up somewhere in around 4,400, no brainer, right? Psychological level. So let's see if we continue to that level and find some kind of support, or continuation will happen here. And as we read in the article, there's a lot of margin calls, right? People that trade on leverage are forced to close their position. So if that continues, we might actually continue lower here. This is the weekly chart, right? So this spike could be the test around 4,400, and if we pass that, could be coming pretty much to this area here around 4,000, also possible, right? So that's on gold, down 9.60%. Palladium also is selling 3 consecutive weeks here on the daily chart. We just broke through 50-day moving average here, and palladium coming to a strong support area, potentially around 1377. Copper, right on 200-day moving average and right on the level of possible support here, right? We had a lot of congestion here, some accumulation, consolidation, whatever you want to call it, and then we moved higher. So we're coming to this level around 520s. Let's see how things work out. This past week, copper down 6.64%. Another metal is platinum. But before that, we have soybeans. Also, you see on the weekly chart, we had a nice move on the weekly chart hitting 200-week moving average, and this week was a sell-off. Could it be correction before continuation? Could be a reversal again. Let's find out what happens. So far, we didn't reach the previous high, so maybe it still has some energy to at least get to that level, but we're not going to guess. We'll just see what happens here. So soybeans are down week, down more than 5%. Platinum, another metal, also coming to a level of, you can call it triple bottom here, 1, 2, and 3. Around 1914, we're right at that level somewhere here, down 3.5%. Wheat, also after a nice spike to the upside, we have a second negative week with correction. Let's see what this week is going to show for wheat. So those are the commodities winners and losers. I think we went through majority of them. Going to Forex, like I said, we had 7 interest rate decisions. I believe that none of the central banks change anything. There's a lot of uncertainty due to the war, oil prices, inflation, other things. It's all connected. So let's take a quick look. Dollar remains strong. And as we read in one of the articles, that the Feds are not cutting the rates, and there's a possibility of actually raising or hiking the rates. And therefore, dollar really has a reason to be strong at this point. We're trading around 99. We went the week ago, we went over 100, and now we're really holding to this level, 99.28. This is the level that is clearly here with resistance, support, double resistance here, breaking above, and now we're really grabbing that level here around 99. Let's see how it's going to work out. Euro, as we know, it's just the mirror image of dollar index in a way. As you could see, we really at the level, just the opposite, at the level of resistance here. Pound tried to break through 135.51 here. We're sitting below 200-day moving average as well. Australian dollar is holding very nicely here. We're grabbing to that 50-day moving average. Even with the strength of the US dollar, Australian dollar is not selling here. So that's a strong sign. New Zealand dollar sitting right on 200-day moving average. Swiss franc, no signs of strength here. Dollar recovered nicely, sitting right on this level here, 0.7876. This is the level that I draw here based on the previous spikes and the levels here. USD CAD, it's after a move up, we're sitting pretty much flat here around 137. And Japanese yen, we did break, the moment we did break through this previous resistance 157.80s, we ran all the way to almost 160. High here was 159.89. Thursday we sold. Friday we almost recovered. I would say 70% from that move. So current level here could be our strong resistance. Take a look. Last time we sold from this level was January 23rd. Big move down, came back, broke through, came straight back and closed right on that level around 159.20s. So that's yen. Also, if you remember about 2 weeks ago, you can look back, we said to watch euro pound as it was trying to sell. So we said that we might come to this level and find some buyers. Take a look what the beautiful trade it was. Of course, it's easy to sell the past, but I'm just trying to show you if you prepare ahead of time, things are possible, not guaranteed though, for sure. Take a look. This was the level we spoke about. You can look back 2 weeks ago, our webinar here, low 0.8611. This was the low here, and take a look on Thursday, 0.8611 to the pip, and nice recovery the very next day. So that's on euro pound. And let's take a quick look what Canadian dollar is doing against the rest. As oil is strong, Aussie is strong, euro is strong. So Canadian dollar is kind of losing its steam, right? As oil kind of waiting for next developments. And yen, let's take a look what yen is doing against the others. Aussie remains strong. CAD was a sell-off here in recovery. Swiss franc, this is the key level, 203.59, as we said, triple top here, couldn't break it. We could be retesting that level again. Let's see if that happens. Euro, similar situation here. We're coming to this level, 184.70s to retest again. And New Zealand dollar, nothing special here. So that's on Forex. And let's take a quick look at crypto, see how things are looking there. Our old line here, the trend line is being retested again together with the 50-day moving average here. We had an attempt to break through 74, 75, right? We hit 70, almost 76, and been sliding since then, sitting on the trend line here. Doesn't look so strong, right? So that's on Bitcoin. XRP had a nice move here. We hit 160 here on the 17th of March. And now we could be on the way to retest this very strong line here around 134, right? We spoke about that level. Ethereum is holding the top of this range, kind of 2122, trading currently at 2081, still above 50-day moving average here. I think that's it with the technicals, and let's just summarize things. I mean, the highlight, I don't know if you can call it the highlight, it's not so positive, but the big news is the war, and still going on. We don't know how long and what the consequences. Nobody knows. Oil is a big concern. The price of oil is a big concern. As we said, we don't really clearly see what the safe haven is. Maybe people just want to be in cash. As hedge funds are selling equities, everybody's selling equities, and gold had the most terrible week in many years. So we don't see really what the money goes through. So I guess the slogan now, get me out of everything at this point. So that's kind of a summary for what's happening. Let's see what this week will bring. As traders, we can't really predict the future, and we shouldn't be, probably. But we should look for opportunities, and we should combine it with a pure calculation of risk. See, this is the only thing you can control. And I think we should do that and look for opportunities that make sense. Have a wonderful week. Enjoy your family and people close to you. And have an amazing, successful, profitable week. and a safe week to everyone. All the best. Take care.